Welcome to the Market Edge Tech Talk with Will Pauly and special guest David Blake. We're going to review the market conditions of the past week as well as longer-term trends from a technical perspective, take a closer look at the major indices, and to wrap it up, dig into a handful of individual stocks and ETFs requested by subscribers. If you have questions or want to submit a stock for next week's webinar, email us at support@marketedge.com.
Hello and welcome to the Tuesday Tech Talk for July 24th. My name is Will Pauly and I'm here with my co-host, David Blake. David, how are you today?
Good, Will.
All right, let's get right into it with the market letter here.
Okay, Will, last week the market nudged mostly higher. Didn't see a lot of action. We started out with a bang on Monday and Tuesday, but then we kind of sold off as the week went off. We had a nice round of earnings with right now, I believe, as of today, about 80% of the companies are actually beating estimates. If they don't beat, they're taken out in the back and taken them to the shed. So the problem with the market currently, we're seeing a lot of uncertainty of the pending trade war with China, and that's kind of holding things up. Now, last week we did see a bump up in yields that helped the financials and industrials outperform, but we also saw a pullback in crude oil prices, which hit the energy sector. We also had a pullback in the healthcare sector after several weeks of good gains. The rest of the market groups were a little changed. The technical condition remained was still bullish. We're still seeing a slowdown in momentum, but we're also seeing some conflicting signals. Now we had a nice thing the previous week. I had mentioned that the underperformance of the Dow Jones Transportation Index could be a problem going forward, but yet last week the transport then came on and rallied 1.8%. And came back above the 50 and 100-day moving average. Now, that's a positive for the broader market. In addition, we're still having internal breadth that remains positive, but as I said, upside momentum has slowed as investors grow leery of the lingering trade concerns. Now, this week is probably the busiest week as far as earnings go. I say they're mixed only because the bar has been set so high. We're still looking at about 20% earnings growth going out there, which could propel the market to new highs. We'd like to see that. We didn't get much bang for the buck on the first quarter, so it's kind of important that if we're going to make it to new highs, we want to see the market start to move up. This week. Okay, the CTI last week was a 10, as you can see on here. That was positive. We're going to drop all the way down to a positive 4 this week. Momentum was positive at a 5. The sentiment was a -2, which means the market was getting a little bit, investors are getting a little bit more bullish as we go into the earnings season. So, like I say, if we can, we need, it's time for the market to kind of kick in here and take this earnings growth to push to new highs.
Sounds good, David. Thank you very much. You talked a little bit about negative divergence in the market recently. In the market letter here, can you talk us through that a little bit?
Yeah, let me go over here. I mentioned last week negative divergence going on in the that I saw in the Nasdaq and the Russell 2000. What negative divergence means is that as we see a stock or an index making new highs, such as what we have over here, and also back here, this is actually a better example. The new high is not confirmed by some of the technical indicators. Now, over here, you can see back here in January, towards the end of January, where we were making a new high. And you can see down here on the 14-day RSI that it was up here at the high right around 82. Okay, we pulled off, sold off, came up, moved up again here to a new high on the Nasdaq, which number one wasn't confirmed by the other indexes. The Nasdaq was the only one that made it to a new high back at this point. But you'll see that that's not confirmed by the 14-day RSI, where the momentum indicator here only made it up to a 62. When you see that, very often it leads to a pullback in the market. It means we've reached a short-term temporary top. In this case, we made the new top. We showed the negative divergence in the 14-day RSI, and then the market did proceed to sell off. Now, what I talked about last week is we made a new high back here on, I guess, June 21st at the end of the month. We pulled back a little bit because we're near the overbought area. And now we've pulled up here. We've made a couple of series of new highs last week. All right, once again, we're over here around 71 on this high. We're on this high over here. We're only making it up to 61, which means that the Nasdaq looks susceptible to me to a little bit of a pullback. Now, maybe it's just going to be something like we had here after the new high at the end of June. I hope that's what it is with the earnings reports we have. Because if we can't make it up to new highs with a 20% earnings growth, I think the market could be in trouble here going in through the August weeks. So we want to keep a watch on that. If you look over here on the Russell 2000, we can see pretty much the same thing happening over here. Let's see, we have a new high over here, and we're up around let's see, around 77.80 on the 14-day RSI. We came up here and made actually a double top, which concerned me. And even more concerning was the fact that we had a negative divergence showing up when we were just a point or two off of a new high, and we're down here in the 60s on the 14-day RSI. Okay, here we are this morning. Well, this doesn't show that today, but this morning we actually made a new high, came up here to about 17.12, took up the new highs, and again, we're having at the end of the day, we're probably going to be down in the 55 or 60 on the Russell 2000. So once again, the negative divergence is pointing to the fact that we may be getting a little bit more of a pullback than we think, and it's not what you want to see when you're making new highs. Even down here at the bottom, I put a different indicator up. This is the ADX with the DI. What DI stands for directional indicators, and we can see that since this area here where we made the new high, and the signal line has begun to trend down. That means that there's not any trend going on in this movement here. We also are seeing the dark line move above the light line here, meaning that the directional indicator is more of a hint of a downward bias to the market at this stage. So this negative divergence is something I want to watch. Again, the CTI is still positive, but it falls to a +4, which means we're getting to the latter stage of this cycle for A and B. I think A and B both will be in the negative range this week, and that's something we want to watch at. So again, I think we need to be having a breakout to new highs here over the next, if not by the end of the week this week, I would say we need to have a breakout to new highs, with the S&P and all by the middle of next week. If not, I think we could be having a little bit of trouble going into November. As we'll start seeing the CTI wind down actually to a 1, which means that the longer term cycle is still bullish, but we're going to see it's susceptible to weakness at that stage. So again, I think the next 2 weeks are going to be a make or break for the market, and if we don't push out, I would advise clients to probably start to take some profits, especially in some of the stocks that have had a big hit on their outperformed on their earnings, and now they start to pull back with the broader market.
All right, thanks very much. That seems like some very good information. So we're right in the middle of earnings. Is there a way to filter through the noise so we can get a hint of a breakout or a possible miss?
Yes, there is. One of the modules that we have on here in Advanced Tools, I'll click on that, is point and figure breakouts, and that can be to the upside or the downside. The point and figure, if you're not familiar with it, in fact, I'll go over here to stocks first. Let's take a look at something like Microsoft. Okay, you can click up to that, bring the second opinion chart up. Now we bring the point and figure chart up. Okay, you can see over here, X's, or a series of X's means the stock is in an uptrend. When it reverses and begins to move lower, we have what we call a 3-box reversal. So if this comes up and hits anything above 103, we'll get this X here. And then it's going to take a 3-box reversal, which would mean even though we trade at 103, until we trade at 101, then we'll reverse it into a series of O's, meaning the trend is now lower, the short-term trend. Okay, back in Microsoft here, back in June, we made a new high, traded at 103 plus, pulled back a little bit going into earnings, and then we came up, we started to go into an uptrend again. Once we were going into earnings, and you saw here we had a top here at the 104 area, and then we hit the 104 here again, which means that the upward pressure was into making the new high. If we're going into earnings and we see that we're getting ready to do a breakout, boom, we got the earnings that came out, and we got this move up to here to Microsoft to a new all-time high, and that was called a double top breakout. And a double top breakout is a decent buy signal. Now back here at the end of May, you had one that came up, we pulled back. It came up to the same level around 98. We pulled back again. You can also draw trend lines on these. You can see the upward trend line going at the bottom. Okay, we got here to a third time. This time we broke out at 98 and went all the way up to 104. Okay, this was a triple top breakout, which is an even stronger buy signal. In fact, they've done some studies where a double top breakout usually leads to the stock being higher, something like 70% of the time, 3 to 6 months out. A triple top breakout will be higher, something like 80+% of the time. If you get a quadruple top, it even goes more than that. So if you have a stock like this, where you're seeing the stock going into a breakout, going into earnings, it's a good chance that you're going to see that company beat their earnings. Now let's just say something where you're starting to see this, where we come into a series of zeros or a downward trend going into the earnings. That would have probably been a good hint to you that Microsoft was not going to outperform or break or beat the earnings estimate that they came out with. But in this case, it worked out very well. The one we had today or last night. Let's take a look at Google. Okay, Google's been on an uptrend here. It had a little bit of problems back here. A lot of this might have been because of the EU problems they were having, and some of the they were talking about. They had the $5 billion fine. Okay, well that was okay. Now we came up here, got back into the uptrend at 1140. We went ahead of that, and we had a nice run up here in the earnings, and the earnings came out last night. This will show a couple more boxes up here, and again we broke out here the last day or so going into earnings, where it was a good hint that Google was going to beat the earnings estimates. Now here's another example. We can stop here I want to make sure it's going to work. Okay, well now on the opposite side, where you go into a company with earnings with a company that the street or the analysts are a little bit weary about what's going on. Here's one called Applied Optoelectronics. It comes out with earnings this week. Okay, going into earnings, we had a nice little run up here in July up to 51, but now as we get closer to earnings, the trend is traded. Okay, we talked about that quadruple bottom. This is actually a fairly rare signal that you're going to get. But it's come down to this, say, 41 area once, bounced off it, came down again, bounced off it, came down to 41, bounced off it. Okay, we did get that little run up here into 51. I think that someone came out and said we should be okay with earnings, but the street doesn't believe it. So we're getting in the earnings here in the next couple of days. If this thing breaks, this is hinting to you that AAOI may be a little shy on their earnings. If they do, you're going to see this continue all the way down. Next support would probably come in here at this level of 36. This may be a good candidate to short. Now, okay, now ahead of time, now here's something else you can look at on this in advanced tools. Look at these charts. What we have here, every day we filter the whole market, and what we try to do is we'll give you first off all the stocks yesterday that broke out of a point and figure top breakout, or if they were going down, they had a point and figure bottom breakout. We're going to list those stocks. What we will do is we'll give you the opinion and what the formation was. Now, one of the things that I look at, just because we have a double top with an avoid here, if you see a double top breakout on an avoid, I would tend to ignore that. The reason being, what you probably have is you have a stock that's been breaking down and you got a little bit of a dead cat bounce. If you look at the chart over here, that's exactly what you have. This is a horrible chart, as you can see on here, where it broke down and now we're getting a little bit of a bounce. Okay, it's coming back up to an area where you're going to have a double top breakout, but all that is, I would ignore that signal. So let's take a look at the other opinions that we have here. Let's go by power ratings. Okay, here's some stocks here, Advanced Auto Parts. If you take a look at this chart, you can see it's breaking out to new highs. If you any of these stocks over here, Hasbro, they just got an offer to be bought out. It was making new highs. Biorad, some of these stocks in here that are making new highs. Wells Fargo coming up here, breaking out of a double top formation. As these stocks are going, if you know that these stocks are coming out with their earnings here in the next day or two, these would be stocks that they're hinting that they're probably going to break out to the upside. They should beat their estimates. Okay, and on the flip side, let's go on here to the let's go to the double. See if we have any double bottom breakouts over here. Okay, here's some stocks that are power ratings -2. Here's some stocks that may be having some problems with their earnings, even though they may be rated long. Maybe a good example might be over here. Here's Multicolor, LABL. Illinois Toolworks. If they're coming out with their earnings, you can see over here they're going to have a double bottom. That's a hint, as you can see on the point and figure chart over here on Illinois Toolworks. Okay, they come down. This is Multicolor, LABL. Going in, if it's going into earnings, you can see that we broke out to a new zero, which means we broke below support area. Okay, here's a triple bottom down here with YY, one of these Chinese stocks that are breaking down. As you can see there, we have a breakout of a triple bottom breakout over here in the lower right-hand corner. And that is showing you that that stock could actually go back down, maybe down to 80 or so before it's going to find support in this area. So if you have a stock that you think is, well, okay, it's kind of pulling back, maybe I'll hold on to the stock while they until after earnings. Well, if you look at the point and figure chart, and we're in a downtrend with the zeros, and we're getting ready to break through a support area, that's a good hint to you as a trader or investor that there's a good chance that this company may not do it. Okay, now one other thing we have over here is one of the few things that you won't find on the street very often. What we try to do is with point and figure early alerts is we're going to try to front run all the people that are already paying attention to point and figure charts. In this case, what we're going to do, we're going to give you a list of stocks. If they trade at a certain price, they'll break out of a formation. In this case, Boston Beer Company, SAM. If it trades up here, it's making new highs, but if it trades at 328, it's going to be breaking out of a triple top. You go over here to the, that's not very good because you can't really see the chart very well. But you can see the upper right-hand corner, we have two rows up there coming up there that will break out to a new high. Okay, here's one, Helen of Troy, HELE. If it trades at 120, that means it'll be breaking out of to a new high. I think this company already has released earnings. I don't have anything really that I know is coming out, but here's one, Activision. If it trades at 82, it's breaking out of a double top to the long side. Okay, we're in a series of X's going into it. If you're trying to play this company for the earnings, it's a good chance that they were going to beat their earnings on this. Now, if you want to also just buy the breakout, what some people can do is they will take the breakout price and say they put a buy order in at 82.05, something, or 82.10 if they want to give themselves some room. That way, if maybe there's a little bit of surprise, they don't beat as much as the street thinks they're going to, you don't buy that stock unless it breaks out. So in other words, if you put your order in at 82.10, the stock's at 81, it gets to 81.75 on the earnings, then starts to roll over, you didn't buy it because you're not interested in this until you get the breakout price, which would be above 82. So that would allow you to buy the breakout to the upside, but you don't get it if it doesn't. Now, on the flip side of that, if you're looking at some earnings coming up in here and you're not sure on a couple of them, you can look at some stocks. Here's a quadruple bottom on the transports, but it held, so that's not a good example. But some of the other ones over here, you can look at the different charts on them. Here's one, Zotas ZTS. You can look up here in the upper right-hand corner. Where if it's going into earnings, it's been downgraded to a neutral. Looks like it's going to break out of a double bottom breakout to the downside. If that company is coming up here with earnings, there's a good shot that they may be having some trouble and they may come up a little bit short. and that would be an idea for you, either to short the stock, or if you're long, this might be an opportune time ahead of the earnings to go ahead and sell it and lock in your profit and not get surprised to the downside, and then you're holding the losing position for a lot longer.
All right, David. Well, thank you. That's some very, very interesting information. I think I can use that myself. So that's all we have for this week. If you'd like to tune into the next Tuesday Tech Talk, we'll be having one next Tuesday, July 31st. Thank you. Have a good week.